I'm Jeffrey Roach, Chief Economist for LPL Financial. In this latest edition of the Street View podcast, we'll discuss Venezuela's place in oil markets. But first, let's set the stage by looking at recent events and what it means for oil prices. So over the weekend, the United States launched a major military operation against Venezuela, targeting multiple locations across Caracas and surrounding areas. U.S. Special Forces captured the so-called president and his wife, flying them to New York to face federal charges on drug trafficking allegations. Also, American airstrikes hit military sites, and U.S. naval ships formed a maritime quarantine in the area. Now, while Washington frames this as a law enforcement mission led by federal authorities, some international legal experts, on the other hand, have labeled it a breach of sovereignty and international law. Amid the brewing policy debates surrounding this decision, I'll focus here on the economics of international trade and not the policy guidance. First, Venezuela plays a fairly small role in the overall supply of oil. Venezuela currently produces roughly 1% of the world's crude, or about 1 million barrels a day. And its exports have been constrained for years by sanctions, underinvestment, and infrastructure challenges. Now, with global production exceeding 100 million barrels a day and major suppliers like the United States and Saudi Arabia and Russia dominating the market, any disruption in Venezuelan output is unlikely to create significant supply shortages. So second, the country has a robust level of proven reserves. Under the base of that Latin American soil, Venezuela holds the world's largest proven oil reserves, estimated at around 303 billion barrels, which accounts for approximately 17 or 18% of global crude resources. These reserves are mostly heavy crude, requiring a specialized refining process, making extraction more technically demanding and costlier than lighter crude types. Now, while these reserves should ideally position Venezuela as a leading energy power, decades of underinvestment and aging infrastructure and political instability have kept much of this oil underground, preventing the country from fully leveraging that valuable black gold, Venezuelan tea, to quote a popular song. Third, the Venezuelan conflict is expected to have minimal impact on global oil prices because the country plays a relatively small role in overall supply. Ample inventories and strong output from other OPEC members and non-OPEC producers will provide a buffer against these geopolitical shocks. The more likely scenario is that over time, international firms could successfully bring that large yet untapped Venezuelan reserves to market, creating downside pressure on crude prices. Well, that's all for now, but please follow us on social media and take care.